And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Wednesday, October 6th, 2021. Well, both the NASDAQ and the S&P finally gave us enough indications on what the markets are attempting to put in. And so I've made some adjustments to the Elliott wave count and also the labeling. The outcome is basically the same. So let me just dive right in and start to explain. Originally, I had placed this minor wave 1 up here with a minor wave 2 up here. Now, with the fact that, and then I had labeled this as minute wave 1, minute wave 2, and that was off to a good start, giving me pretty good inclination. It's like, okay, we're going to start heading down in this third wave. But then it stopped abruptly and they started to rally, and that just closed the whole thing down. And so what it ends up being is, as I had once said before, that I had put the minor 2 up here, and that may have to get shifted over, which was initiated primarily by the S&P in its particular structure, which is a little bit different than the NASDAQ's. The S&P had not made a new low below the minor wave 1 on that particular chart, whereas here it had. So what my choices were is to recount this initial wave down and to include this difficult wave here, but it ended up being the minute fifth wave, or subminute fifth wave within that minute 3. And then we had a 4, and then we had a 5. And so I've moved the minor fifth wave down. Minor fifth wave, boy, I'm not talking right. The minor first wave, I've moved down to the low at 14,373, 70, 50, somewhere in that area. Let me get it exactly for you. 14,373. And from that level, we've launched higher in an ABC, which will be labeled minor wave 2. So what can we expect from here? So I've put out 2, 1 retracement, 1 extension. So let's take a look. First at the retracements. That covers the minor wave 2 correction. So we take from the top where wave 1 started to the bottom of the completion point of wave A, and we get that the market surpassed at 763, 764, the 382 level. And now it's heading up towards the 50% level, which comes in at 14,885. Now, if I take this next extension, which would be comparing the C wave to the A wave, so A of 2 versus C of 2, we're now going to compare those on a Fibonacci basis and see what comes through. The first one is 14,806, which would be where wave A would be equal in length, wave C would be equal in length to wave A. Well, it's already exceeded that, not by much. Like it's starting to come back down, but I don't believe that the C wave is completed there. It's also broken above the 200-day moving average. And if we get a close above that, at least the hourly chart, which I think we just did, that's a good support for continued rally. So I have moved things. That's our next level right here, 85 to 96. And then our next zone where the cluster is way up here at 14,041 to 15,041 to 15,095. And so that's actually got high marks to be the completion point. Before that, though, we do have a small cluster at 14,885 to 14,896. So just about to 14,900. And that may complete it. If not, that zone can go from 14,885 to 14,952. That would be the zone that I think contains and completes this wave 2. So we have our upside. This one's already been exceeded, so I move it directly up to this. And that zone is about 70 points, pretty easy for the NASDAQ. And then above that, we have 15,006 up to 15,095. So basically about 89 to 100 points worth of it. So right in that area. And the markets may just rally, and all the algorithms are set to buy it up to 15,000. That may be the case. I know it's going to give a false illusion that, oh, these are all downsides are down, happy days are here again, et cetera, et cetera. But we have a lot of things overhanging the market, and that could really just toss it right back into a negative mode and reverse things. So I urge everyone to stay on your toes. This remains a corrective counter trend move. That suggests that the trend is still down. That trend reverted to down from being months and years in a bullish mode. So it's real easy for traders, retail, and professional to just jump back on that bullish train. And it's like, we're back, happy days are here again. Because somehow they are exactly that. They're happier in an up market. There are a lot of traders that are happier in a down market. So being able to function in both is a real treat and a talent. So what would I expect for tomorrow? I expect continued upside, actually. And now, let me just also say that on an hourly basis, this market, come on, thank you. This market has, C has gone above A, and it's done 100%. So that's a very common relationship on a Fibonacci basis between C waves and A waves. So all that's been met. So if we were to walk in tomorrow and this thing is already heading down and breaking below the 4, the 8, the 20, the 50, then yeah, we could consider it complete, regardless of what these upside levels are. They're just, giving a little bit of a projection of what the possibilities are, what the potential is. That's not like, that's a command, NASDAQ, you must reach that level. So basically we're in completion mode anywhere it begins to top out and then turn. Now, once it does turn, breaking back below the 200 won't be well received, because it's just a rejection of whatever high is there, and that, the sellers are back in control. Then by then, if it gets up here, we know that the 4 and the 8 are going to be up there with it. The 20's got a lot of work to get above the 200. So to really kind of turn this whole midterm hourly picture positive, both the 50 and the 20 need to move above the 200. That's a lot of work. It's going to be a lot of upside, and possibly if it got up into here, that would occur. But right now you can see, yep, they're all turning higher now because we had a very solid rally this afternoon. And then start of Globex, they pushed it even a little bit more. Now they're on wait and see until the Asian markets open, or start to open in about 40 minutes. Then of course we have Europe coming on board. Now, if everybody responds to this relief from the United States that we're going to deal with our debt ceiling, then everyone's going to forget everything else in terms of, well, Evergrande's still not paying their bills and they may default at everything, which is going to cause a lot of problems for the globe, not just China. We still do have that debt ceiling to deal with. Whether it's put off until December, that's just a short 3 months away. So, unless I'm reading it wrong, and it's actually December of 2022, but somehow I don't think that they're going to do it for that long. I think they'll give the Republicans will give the Democrats 3 months, but I don't think much beyond that. So let's just say it is 2021, December. That's 3 months. And they better come up with a better deal than what they're trying to sketch out now, because nobody's going to be buying it. But so far, any relief news electronically, push the buy button. And that seems to be what happens. Because I think that that's what the expectation of a reaction should be. But I think that because it's a corrective move right now, it's a short-lived reaction, and there will be something. Now, again, tomorrow we have the jobless claims, and on Friday we have the employment numbers. So if they don't come out in line or showing any improvement or meeting expectations, I think that could be a turn. That could drive the market lower. More news on Evergrande or from China, what's going to happen. That can provide a turn. A breakdown in the talks about the debt ceiling, that can provide a major turn. Plus, we have now moving out into next week, begin earnings season. So we got disappointments that could come that way. So there's still a lot of fundamental and geopolitical and political things that could upset this market. So therefore, I believe that this is just a corrective bounce in a new and ongoing decline. So I'm going to leave it there. Tomorrow, we'll probably get some additional bullishness. We've got our resistance levels all mapped out, and we know what we're going to be looking for should it start to decline from here. If it doesn't get up that much higher and it starts to decline, it needs to get back below the 200, start breaking below the other smaller ones, break below the 20, break below the 50, and then it's good night nurse. And then, once a minor third wave begins, it should just be twice or 3 times as severe as this first wave was. And there were a lot of points of just falling out of bed right here. But I think we won't get as many of these nice little rallies in between. It should be a straight shot. And that's what a third wave is going to look like, in my opinion. And I'm going to leave it right there. I continue to trade smart. Don't get fixated or fall in love with bulls or bears. We just want both to happen and to make the moves, because that's how we make money. And so we're going to continue to trade along with our moving averages that are going to give us signals for entries and exits, plus the Fibonacci, plus the Elliott, and then just the individual bars. We watch price action, and we have an intent to make money no matter what direction the market takes. We just hope it does both. So I'm leaving it there. Our next update is Thursday, October the 7th.